Wow, stocks are bouncing. Bitcoin is bouncing. Is this the time for you to get back into the markets? Oh, look at this, right? Treasury yields are retreating because Feds are leaving the rates unchanged. Is this really what's happening in the markets? Is now the chance to jump back in? Now, first of all, we saw the Federal Reserve yesterday come out with their all-important FOMC meeting to decide on where interest rates are headed. And as widely expected by the market, they left rates unchanged, right? But is that why the reason for markets pumping? Well, no, because that's what the market was already expecting. And even if they did hike 25 basis points, it's not a big deal. See, right now, the Federal Reserve rate is at 5.25 to 5.5%, right? If they were to hike another 25 basis points, it would just be 5.75, which is not a big deal to begin with. The Fed kept on playing games with the market and kept on insisting that this may not be the last hike. They won't say that they are pausing for now. However, the market keeps on getting clues from what the Federal Reserve Jerome Powell is actually saying, and keeps on thinking that what he's hinting at is this was most likely the last hike, the last rate hike for this cycle. So essentially, the markets are not believing what the Federal Reserve Chairman is saying. Even though he won't take another hike off the table, the market thinks it's not going to happen. So basically, we've seen over the last couple of weeks that the US two-year government bond yields has gone down from about 5.25% to about 4.9%. That's the market predicting that's where the rates are headed over the next 2 years, is heading down rather than going up or pausing. But what's even more significant than that is not the Federal Reserve rate, which is only a very short-term daily rate. It's the longer US 10-year Treasury yields, right? Because they think the Fed has already paused, right? Therefore, look at this. It's gone from 5% down to 4.7% now, a 30 basis points drop in the last week or so, right? And especially the reaction was big yesterday. So what that means is basically the market thinks this is the top of the cycle. Yes, the US 10-year yield could still go up, but for the next couple of weeks or even a few weeks, this very key US 10-year Treasury yield is falling. And if you've been following me or watching my videos or on Twitter, then you know how important this US 10-year Treasury yield is, right? When it is falling, then tech-heavy stocks such as the NASDAQ should take off again, right? So I do think we're coming into another big rally, one more leg of a blow-off top in the NASDAQ stocks, especially what they call the AI7 stocks, right? Stocks like NVIDIA. Now, for Bitcoin, obviously, it's also benefiting from the ETF news, right? A Bitcoin ETF and even a Ethereum ETF, it's likely coming. So therefore, we're probably not just even going to see Bitcoin and Ethereum bounce, but a lot of the smaller coins, like, Solana is already bouncing, but that could rotate into other smaller altcoins as well. So for the next few weeks, it's probably, as the US 10-year Treasury yield is falling, it's probably a very good time for markets in both crypto and stocks, unless a major war breaks out in the Middle East involving Iran, which could still happen.